On the morning of February 28th, the US and Israel struck Iran. While the world was still processing what just happened, crypto became the only market that mattered. It was 2:30 a.m. when Trump announced the attack. US stock markets closed. Futures dark. European and Asian exchanges offline. For most of that Sunday, the entire global financial system was effectively frozen. Except crypto. Bitwise's chief investment officer Matt Hogan called it the weekend that changed finance, and he wasn't exaggerating. Hyperliquid saw massive spikes in perpetual futures volume, not just on crypto but on crude oil too. Tether's tokenized gold product hit over $300 million in 24-hour trading. Prediction markets on Kalshi and Polymarket broke record volumes. This time, on-chain finance wasn't a sideshow, it was the market. Hogan, who once thought crypto would spend the next decade growing slowly on the edges of traditional finance, says this weekend proved him wrong. His message to hedge funds, banks, and traders: get on-chain now because everyone else will. It's also worth watching what's happening with crypto inside Iran. Crypto analytics company Chainalysis has been tracking a recurring pattern for years. Every time Iran faces a geopolitical shock, a protest wave, or a new round of sanctions, crypto activity spikes. A weakening rial, runaway inflation, they all push more Iranians towards digital assets as a pressure valve. Iran's central bank has even been buying crypto itself, acquiring roughly $507 million in USDT earlier this year to prop up the collapsing rial. Nobotex is Iran's dominant exchange by a wide margin, 11 million users and $7.2 billion in transaction volume in 2025 alone. It's essentially the backbone of Iran's entire crypto market. So when the strikes hit, what happened? Inside Iran, transaction volume collapsed, down roughly 80% as the government throttled internet access. The central bank ordered major exchanges to halt trading of the USDT Toman pair, the critical bridge between crypto and Iranian currency. But before the blackout fully set in, money moved fast. Outflows from Nobotex spiked 700% according to Elliptic. Chainalysis tracked $10.3 million, leaving Iranian exchanges between Saturday and Monday, at times hitting $2 million per hour. Initial tracing suggests the funds headed to overseas exchanges and potentially into self-custody wallets. This mirrors a pattern Chainalysis documented earlier. During previous internet blackouts, Bitcoin withdrawals from Iranian exchanges climbed steadily before connectivity was cut, suggesting users anticipated the shutdown and moved funds while they still could. TRM Labs urged caution on calling it capital flight, noting that exchanges under stress often reshuffle liquidity internally. And Chainalysis was blunt: from this close to the event, separating retail panic from exchange management from state-linked activity is nearly impossible. On that last front, the IRGC and other Iranian state actors have previously used domestic crypto channels to move money across borders and dodge sanctions. 2 UK-registered exchanges were sanctioned just last month for facilitating IRGC transactions. It goes further. Iran's state-run defense export agency Mindex has publicly stated it's willing to accept crypto as payment for ballistic missiles, warships, and other advanced weapons. One of the first known cases of a nation-state openly offering to sell arms for digital currency. Here's what we know for certain. Iran's crypto infrastructure was already massive before any of this happened. It survived a $90 million hack on Nobotex in 2025, it survived years of sanctions, and it survived this weekend, stressed but structurally intact. What February 28th proved is that when traditional finance goes dark, whether from war, sanctions, or a 2:30 a.m. announcement, crypto doesn't wait, it's already open.